Carpets, coins, stamps, and other collectibles such as baseball cards fit into this category. While it is true that this type of investment occasionally goes up in value, it is even truer that investments in these collectibles go down as well and much more often. The people who make the most money trading in these areas are the ones who sell the antiques, Persian carpets, coins, stamps, and baseball cards to others. Unless you're an expert, this is not a place to put your money. Many people invest in oil and gas stocks, mining stocks, and penny stocks. While there are very solid operators in oil, gas, and mining, there are also many questionable stock market hustlers in this type of investment. I personally have lost thousands of dollars being talked into mining investments by very clever and pleasant people. With regard to penny stocks, 80 to 90% of penny stocks never recover to the price at which they are initially sold. They call these churn and burn stocks. They constantly work on the telephones to get people to get in, and then they sell their shares which they bought earlier and abandon the market. They are the greatest waste of investment capital in the country. If someone calls you with a wonderful success story about penny stocks, hang up the phone. Another type of investment that you read about is commodities. Trading in the commodities market is one of the biggest of all gambles. Reputable stock brokerage firms require that you demonstrate to them that you have at least $25,000 to lose before they will accept your investment account. And you can be sure of one thing. If you invest in commodities, you are going to lose your $25,000. Even the most sophisticated commodity traders in the world lose money every single day. Stay away from commodities unless you're willing to make it a full-time life commitment and you have a lot of money with which to learn the field. Your primary rule for investments of all kinds must be, don't lose money. It's better to keep your hard-earned money in an interest-bearing account than it is to lose it on foolish investments. Study after study shows that if you simply leave your money growing in a well-chosen mutual fund and let it compound over the course of your working lifetime, you will be further ahead than with almost any other investment except your own business. The rich are almost always conservative in their dealings with money. They maintain low levels of debt. They handle their money with care, and they continue to look for ways to increase it while minimizing risk. Learn from the wealthy and do what they do. Follow the leaders, not the followers. Remember that the first step to becoming wealthy is to earn the money. The second step is to hold on to it. It's not how much you earn, but how much you keep that counts. So be determined and be careful. Here are 5 ideas that will help you in your goal of achieving financial independence. Number 1, open a special savings account and begin building it up until you have 3 to 6 months of expenses in reserve. This single action will change your personality in a very positive way. Number 2, sit down with an insurance agent and ask his or her advice on the type and amount of insurance you need to protect you from any expected hazard. When you are properly insured, you feel much better about yourself and your life. Number 3, subscribe to and read magazines and newspapers aimed at people who are serious about their financial futures, such as Forbes, Fortune, Business Week, The Wall Street Journal, Investors Business Daily, and Money. Keep current with what is going on with money. Number 4, begin building a cash reserve to use for investment in real estate. Then choose a property that is within driving distance of your home, never one that is far away. And number 5 recommendation is think continually about starting and building a business of your own if you're not already doing it. But by building a financial estate, you are laying the groundwork for getting rich in the months and years ahead.